Hey, everybody, welcome back to the Unstoppable podcast. I'm your host, Diana Chen, and I'm here today with Jacob Martin. He is the NFT attorney on Twitter and also in real life. Welcome, Jacob. Thank you so much for being here today.
Hey, thanks for having me.
Of course. So, before we dive into the legal stuff, which is going to be the bulk of this podcast episode, give people a little context into your background so they know you're a real attorney and that what you have to say. Also, disclaimer: what you have to say is not legal advice. Jacob is an attorney; he's not your attorney. This is for
There you
informational
go.
purposes only. All right, take it away, Jacob.
Yeah, I've got it in my Twitter bio, my LinkedIn bio. It's like, am I the NFT attorney? Like maybe, right? Like that's just kind of a cheeky thing that I added a few, 6, 7 months ago. And but yeah, so my name's Jacob Martin. I'm an attorney here in Southern California. I live in Malibu. Um, and actually, while in law school, so back in like 2015, 2016, right before I started law school, is when crypto kind of got my attention. And then 2016, 2017, I interned at a law firm that did a lot of ICO paperwork here in Southern California. And so we were looped in with like Shepherd Mullen and Cooley and some of the big firms doing paperwork. Uh, it was all chaos, but I loved it. And so I kind of personally felt like smart contracts would replace lawyers anyways. So I raised some venture funding after, like, at the end of my second year of law school, going into that summer. And I tried to build out a wills and trusts, like, smart contract platform. So, like, probate documents. When you die, where does your stuff go? That's still needed. I mean, there's CASA for Bitcoin and there's a couple of other things, but like, I think assets should go automatically, and I did then, I still do now. Um, but yeah, so I've been doing basically like high utility smart contract stuff as either like a product person or CEO kind of for the last 3.5, 4 years, really, or that was 3.5, 4 years ago. I did that for a couple of years, and then 2020 was basically the worst year for me and for most people, right? So at the beginning of 2020, we shut down the startup after really hoping Wells Fargo would buy it. And then, the short version of 2020 is my wife's grandma died, and then my dad died, and then a few months later, my daughter was born. So it was like a whirlwind of a year. But NFTs caught me end of 2020 the way they were supposed to, like clocked me right in the face. And I was like, oh my God, I love all of this. This is all of my favorite things at the same time. This is exactly what I thought smart contracts would do. They would just eat a whole industry. Um, and so, yeah, my wife gave me permission to treat my law firm like a startup, and I did my best to make sure that I knew as much as possible, if not as much as anyone else or more in the industry, about what are these NFTs, how do they work exactly, and how many people can I help here. So that's led me to where I'm at now, and I've worked with various Fortune 500s, a bunch of top artists, a bunch of my friends at this point, collectors, um, and people just across the NFT ecosystem, kind of tangential as it kicks out into DAOs now as well.
That's awesome. Yeah, and wills and trust is definitely applicable to crypto as well. I think there's a lot of questions around, what happens to your crypto and your NFTs and all of that when you pass. And I don't know that we have very good infrastructure and tools to help people prepare for that just yet. I think that's probably an area that needs some development.
Yeah, even with the new stuff, right? So like that was something I was trying to do a while back, and that was just like passing along your estate in general. But when you think of NFTs, it's even weirder. Maybe weird's the right word, because what's happening now is like you own an NFT. Well, an NFT doesn't per se have a value, right? Like you can look at like a cool cat and say, well, other cool cats are worth this, so mine must be worth X. But when you're thinking of one art or like incredibly subjective items, it's hard to really tell somebody what your portfolio is actually worth. It's like what you would accept is one thing, but what it's actually worth in the market is difficult, and when people pass away, like there's taxes levied if your estate is over a certain size, and we're not really prepared to be able to assess what someone's portfolio is actually worth. So um, we'll leave that nugget with people, and they can cringe over that for a little while. But that's not that's not as much the current, thing people are really thinking about.
Yeah, I mean, some people definitely are, and taxes is
Well,
something that,
sure.
as we're wrapping up the year, which is crazy to say that, we are coming up on the end of the year, people are thinking more and more about taxes, what they're going to do. So let's dive into that a little bit. To start off, I guess just like, can you speak generally as to how taxes work with NFTs? Like when you buy an NFT, when you sell an NFT, if you're holding an NFT over the course of a year, like does the law see that from a tax perspective?
Totally. So I feel like it's worth me giving the caveat that like I'm not a tax attorney by trade. It's not what I do full time. But I've spent a lot of time this year. Uh, I feel like someone saying I'm not a lawyer, but here's legal advice, right? Like, no, it's like I spent a lot of time this year with other tax attorneys, other accountants, trying to make sure we get this right, so that I can speak on it. And the way that it's viewed in general right now is, you know, the IRS and has determined that if you swap Bitcoin for ETH, right, like a swap, like a sushi swap, a uni swap, whatever, that's a taxable event. Um, and they treat it as though you sold your Bitcoin at X price for USD and then bought ETH at X price. So if anyone wasn't sure yet, like a swap of crypto is, considered a taxable event. And then if someone were to buy an NFT with ETH, right? So you spend one ETH on an NFT. Well, the IRS doesn't really care what the price of ETH was, as in, like, they don't think in terms of ETH, they think in terms of USD. So if you spent 2 grand, I guess follow me on this roadmap. You spend 2 grand on an NFT, and that was one ETH at the time, and then you sell it for 6 ETH 2 months later, but ETH has gone up to 3,600. They aren't thinking in terms of 5 ETH gain, right? They're thinking in terms of USD. So at that point, the USD was 2K. Now it's 3,600 per ETH. So the USD is almost doubled. And then you gained from 1 ETH to 6 ETH. So there's like a quite large gain there, right? So I don't know, six times through, so let's call it like a 15, 18, $15,000 gain maybe. On that, like that's where the tax would be assessed. Like how much do you pay in taxes would be assessed based on that 15K or so gain. And there's this designation in the UK of like a digital asset, like they're a bit more progressive and more up to speed on crypto in general. But in the US specifically, um, one of my counterparts who's helping me with this kind of tax related NFT project we're putting together is it'll include like a big tax guide and several other really useful things. He has been quoted in the infrastructure bill that's before Congress right now, like 8 or 10 times, and he's one of the kind of crypto policy leaders in the country, maybe in the world. And he personally is pushing for designation of NFTs, um, not as collectibles, right? They are not a collectible. The collectible would make it a 28% tax, right? And so, well, I guess I should clarify that. So if an NFT is deemed a collectible, like certain art is, then it would be 28% flat tax on things. However, if it's treated like it's crypto, right? Like I know more than one person who, when they buy a crypto punk, they're saying this is a leveraged bet on ETH, right? They're just viewing it as crypto in a different form. Um, all of that is up for debate. All of that is potentially disagreeable. But at present, the IRS literally hasn't made clear if they're going to give it collectible tax, which is 28%, or if they're going to give it short-term, long-term capital gains tax, which would be significantly different. Um, and so we're kind of putting together a guide on like, if this, then this, if this, then that, right? Um, and the other thing is, for people creating and selling NFTs, that's going to have, a personal income tax bracket. So, like, if you make and sell an NFT, you're going to get taxed as though you created and sold art or created and sold whatever. Um, so that's a situation where you would really need someone to understand, like, if they aren't setting up their own entity, right? So artist A needs to probably set up their own LLC or their own S corp, right? Every situation is a little different. Um, or else they may end up paying 50% plus in personal taxes when they could have probably run it through a different entity. Um, I hope that's a helpful 5 minute crash course there.
Yeah. So are you saying that for from the artist perspective, it's artists should form some sort of legal entity around their art instead of just selling art as themselves, the individual?
Yeah, very likely. I mean, this is how the music world works. This is how like the fine art world works. This is how, kind of art generally works is it allows an artist to have an entity where the funds flow in. It allows the artist to spend money on materials, on art, on paint, on gas fees, on whatever. Which gas fees is another conversation too, I suppose. But like an artist might do buy this NFT and I'll send you a physical print, right? Well, that print's going to cost them money. If they're running all of the income and the expenses through an entity, then that is likely going to be a better tax situation for the artist.
Okay, gotcha. And
Yeah.
from the perspective of collectors, then, is the taxable event only happens when somebody sells their NFT, or does it happen when they buy one as well?
So taxable event on a buy would only occur if, like I said, so like if it was like switching out Bitcoin for ETH or something, and then they buy, well, then the Bitcoin for ETH would have been taxable. But if I take 5 ETH right now and I just go buy something, and you take 5 ETH right now and you go buy something, I don't see any world in which there's a taxable event on the purchase.
Got it. And then
Well, I
long-term
guess so. We
versus
can give it.
short-term
We could
cap.
give it. I'm
Yeah.
sorry to cut you off. I would just to clarify. It's like when you buy a car right now, right? There's like a sales tax or something, right? But there's not any definable sales tax situation occurring right now with NFTs.
Okay, gotcha. Um, and then with long-term versus short-term capital gains, then if the the regulators decide that NFTs are not collectibles and that they should be taxed as crypto, long-term capital gains happen if you hold your NFT for over a year. Is that right?
Yep. 12 months in a day.
12 months in a day. Okay. Got it. So what is like the best way for people to start to like keep track of, like what they're buying and selling, assuming that they haven't, they don't have like a spreadsheet of it yet. Like I would have to go back in time to whenever I bought my NFTs and like see what ETH was at the time and like convert it. Like how do I even, where do I even start?
Yeah, so one thing that's going to end up kind of catching some people by surprise, I think, is if you bought ETH, especially for anyone who bought ETH either a long time ago or on like a different exchange, the ETH is going to be treated like pure profit, right? So start with the ETH. So like if you buy an NFT for one ETH, but it's ETH that no one had ever seen before, right? You pull it in for the there's ways to almost get into like there's money laundering opportunities, obviously. So I don't want to recommend how to do those. Um, but if you haven't tracked your crypto prior to this year, there's a chance that like when you do actually take your crypto wallet, your MetaMask, your Coinbase wallets, your non-custodial wallets, and you link them up with any of these tax softwares, you might find that you owe a relatively significant tax burden that's backward facing, right? Like from last year or from 2 years ago because you didn't pay taxes on it. I think that's actually probably going to catch more people by surprise than we expect. Personally, I think we're going to have a bit of a Black Friday for NFTs occur. Um, as in, I think a lot of NFTs are going to go on sale for very cheap come tax season this year. Um, but what you could do right now is you would log into any one of the five or six like relevant crypto tax software companies, right? So you've got companies like TaxBit and ZenLedger and CoinTracking and CoinTracker and whatever, and they've all raised quite significant funding at this point in the last year or two. to build software just for this stuff, to track this stuff. Um, so I think it's like by importing all of your crypto transactions into one of those wallets, you're then going to have to go audit your own wallet a bit to say, well, this transaction needs me to manually input how much I spent or manually input what I bought or how much I sold it for. Because so far, none of the software that I've seen is like fully perfect. I'm actually in the process right now of auditing 5 or 6 software companies with a couple of accountants and a couple of other tax attorneys, just to make sure we know as much as we can and can make good recommendations to people. Um, and then once you've set up basically like this is my wallet, this is what I'm doing with it, this is where I buy and sell. You should be able to start tracking and really figuring out the cost basis, the sell point. And most of these software companies will say, here's your proposed tax burden. I think all of that is like a fully required like step one. And then, getting an accountant that's crypto literate is clearly step two. Like I don't think anyone who's done more than $100,000 worth of transactions in crypto across multiple transactions should like attempt to do their own taxes. I think that's probably the break off point in my opinion.
Yeah, that makes sense. I know you're still in the process of auditing, but have you found any software tools that basically like you can just either connect your wallet or send your Etherscan link and they'll like automatically pull all your transactions?
Yeah, so several of them will do that. They'll do like the automatic pull of transactions. The thing that we're looking into the most right now and are like really hoping to find answers on is not only who can pull the transactions, but who can like identify like pulling transactions from Etherscan is one thing, but then there's multiple other wallets and there's other chains, right? And there's other things going on that are also NFTs, right? There's Solana based NFTs, there's whatever. So really what we're hoping to find is that somebody or 1 or 2 software stand out as like cross-chain utility. Right now we're not we're not seeing anybody's website that is specifically catered to, hey, we are tax software X and we're dedicating $10 million to the NFT side of things and we're going to robustly build out XYZ, right? Um, but it's part of my goal is to get tax software in as many hands as possible, even if it's like only 7 out of 10 good, right? Because what I think is going to happen is we're going to have a lot of people not file their taxes at all and then get audited in a couple of years and be screwed. Or we're going to have
Mhm.
people work with non-crypto literate CPAs and not use tax software. And their CPAs are going to like quit their jobs, right? Or just fire them as clients and be like, I literally can't do this because we're going to get audited. And then there's going to be a huge shuffle, a huge scramble of 50,000 people all DMing me looking for an accountant because that's already like, I get asked 5 or 10 times a week, hey, I've got this, can I get help? I've got this, can I get help? I'm like, well, yeah, I can recommend you to somebody, but good. I'm glad you're asking. Like you do need help. um,
Yeah.
and and yeah, so that's what I think is like step one is get it cooked into one of these softwares, and then put that in front of a crypto literate CPA and let them tell you where they see irregularities.
Yeah, yeah, for sure. Going back to a point you made earlier about gas fees, how is that taxed? So, both when you buy an NFT and you pay X amount of gas on it, and then also when you
Yeah,
sell it, how is that all treated?
yeah. So how it's taxed is quite clear. Is the understanding that I've seen across like various experts. How it's tracked is less clear. So because when you're minting from a third party website, like not open, so you're minting from someone's website directly, and then you're cranking up the gas, all of that, say you bought 5 NFTs and it cost you 2 ETH to buy and 2 ETH worth of gas, and it was like a flat 10 grand. Well, your cost basis is 10 grand, and that's simple. It doesn't matter that the NFT only costs 5 grand and the gas costs 5 grand. The system will just look at you made one 10 grand purchase, right? But my understanding is several of the tax softwares are only registering the like 3 ETH purchase, not the 3 ETH spent on gas, right? Or 2 ETH on purchase, 2 ETH on gas. It's just triggering how much was spent on the purchase. So basically, I've got a couple of softwares that actually are better than that and that are showing, you know, the cost basis on minting this project is 10 grand. It was 4 ETH total instead of like a purchase amount and then not having the gas amount. But I think that's probably a yellow flag people need to be looking at is yeah, is making sure that either Etherscan or whatever software they're using like bakes in, properly bakes in that cost of gas as part of the overall cost.
Got it, got it. Okay, so it's like if I buy an NFT for 3 ETH, but I bought it when gas was super high at like 2 ETH, so it's like 5
Mm,
ETH total, and then I sell the NFT for 4 ETH, which is technically more than what I bought it at 3 ETH. That's
right?
still counted as a loss on my end.
Yes, maybe, because we would also have to add the layer of what was USD at when you bought at 5 ETH and what was USD
Right.
at
Oh,
when
right,
you
right, right,
sold
right,
at
right.
4 ETH, right? That's the hard part. That's the part people forget
Huh.
about is you notice with CryptoPunks, like sometimes you'll see somebody buy one for like a few weeks ago, somebody bought one for like 100 ETH and then they sold it for 80 ETH like 3 days later. And people were like, oh my God, what an idiot. But ETH had actually run up hard enough during that period that it was a slight gain, I think. I think it was like a $5,000 gain or something. And ETH had just taken a dump. So this person was trying to get out from under the CryptoPunk and they still didn't actually lose money, even though they lost 20 ETH in the situation.
Got it. Yeah, that makes sense. Yeah, that's a lot to keep track of.
Yeah, it's a lot to keep track of.
So, shifting over a little bit to the biggest topic in crypto law right now, which is securities. Everything's a security. We're not sure what's a
Everything.
security. Can you tell people, like, just from starting with a very basic level, like, according to the law, what is the legal definition of a security?
Right. So the Howey test is what you hear referenced by everyone, right? So um, basically, the definition of a security is buying a thing with expectation that that thing goes up in value due to something done by someone else. More or less, that's the short version. So with NFTs generally, they aren't securities, right? They're collectibles, most of them. They are art or they are cool or they are whatever, and they don't promise you any future utility. They don't promise you any future dividends or airdrops or revenue or anything. It's just a collectible. It's just a thing you buy, like a painting at Target, right? Um, some NFTs do offer you dividends and other things, so that's a little different.
Okay, so let's break that down a little bit. First of all, you said that most NFTs are collectibles.
Yep.
What I know there isn't guidance on this just yet, but I guess like from your perspective, what are you thinking might not be a collectible and be treated as like an investment vehicle or a
Yeah,
security? Yeah.
so working around a lot of the projects and working with a lot of people in the space, I'm not gonna like describe something specific that could potentially like rug anybody. But I would say there's a fine line between buying an NFT that says buy this NFT and you will receive X yield, right? Like that's a public sale of a thing that people are buying in expectation of the yield. That's tough. And then the fractionalization stuff obviously is going to be the biggest conversation with securities because you know the idea that you can buy a token that represents ownership of a different NFT, and your hope is that by doing nothing, somebody else comes in and buys the whole NFT from the group, right? There's this element there where it's like securitizing an item potentially. Um, and so, yeah, that one's probably it's probably one of the topics that I think is pushing the limits the most when it comes to potential securities arguments. Anyone who thinks a CryptoPunk is a security is silly. That's not. There's no argument there. They were not even for sale. They were free. And then, we saw the argument against Dapper Labs earlier this year that Top Shots are securities. And that was also a dumb argument. Top Shots are clearly not securities, but Flow Token is probably a security. That's why it's not for sale in the US. Um, kind of simple, clear cut argument there as well.
Okay, so it's more the token part that can be considered a security, but if you're just selling art, if you're just selling cool cats, penguins, all these like fun little things, none of those are considered securities, even if there's like language on the website that's like, here's our roadmap at like when we hit
Right. So
50%, we're gonna do
roadmap,
airdrops. Yeah.
yeah. So roadmap is starting to get weird. Airdrops are definitely going under scrutiny with the SEC. Um, because it can be pretty clear that you're buying a thing because you're expecting the airdrop, right? Or you're buying a thing because you're expecting a yield or a dividend or whatever it may be. Um, the simplest way I can put it, and when I mention like fractionalization or I mention like flow token, is think about both of those things as fungible, right? Like they're fungible tokens. Like flow is a fungible token. ERC20 token called XYZ that represents ownership in a specific NFT, that's a fungible ownership of a non-fungible thing. Um, so fungibility is where the securities element comes in because by you doing nothing, the whole fungible group can go up or down. Whereas with a non-fungible token, a singular piece of art, this piece of art on the wall behind me, you know, whether this artist has a good or bad career moving forward, it's not like this art is considered a security. Um, it's just a scarce good. Like it's an individualized good, not a fungible thing that is being traded on and going up or down in value based on the success of an underlying company or project or item. Also, for anyone listening, the SEC has not done enough of analysis on any of this stuff. So please don't call me and tell me that I'm stupid. Just tweet at me and you can call me stupid on Twitter. That's fine.
Yeah, I know a lot of this is speculative still because we just don't have enough guidance. I guess like from your perspective, what do you hope to happen next to that's going to protect collectors and artists and help us continue to enjoy NFTs in the way that we're enjoying them now? Is it, a big lawsuit? Is it like just that we see regulation around NFTs are not securities. Like from your perspective, what is like the best thing that like we could see from regulators right now?
Well, with the amount of people that were supposedly served notice at mainnet this week for securities violations, I don't think we're going to get the clarity we want without some blood in the streets. So I won't say I want any lawsuits, but I don't think we're going to get clarity without the SEC utilizing a lawsuit as their opportunity to attempt to regulate, right? Because Congress is really slow with regulation. And so sometimes governing bodies, um, whether that's like immigration stuff or that's security stuff or IRS stuff, they'll basically utilize a lawsuit as their opportunity to like shoehorn in what they want to do, right? And so I do think that a potential lawsuit is on the horizon, a lawsuit or two that will help with clarity around NFTs, around securitization, around collectability. And I've worked on a couple of cases this year that have been private cases. I don't really do litigation, but when it comes to NFTs, there aren't a ton of litigators that know what NFTs are. So I've been a part of a couple of cases where I've helped. And if those cases had gone to court, we would have some precedent right now, and you would know what those cases are. But they settled privately because it's like the NFT and like crypto industry, I think does a decent job of keeping their dirt to themselves, right? So we've got some dirt that I know about, that several of us know about, maybe a lot of us know about, but it's not getting played out in court. which is probably a good thing to some degree, and it's a bad thing to some degree. But yeah, I think the SEC is going to go after somebody, and that'll give us some clarity. What I would like to see happen, in my ideal world, would be that we actually get like relatively good guidance from the IRS, or like good as in like clear, right? Like if we could get the IRS to just like actually listen to someone who knows what they're doing and work, maybe even work together with somebody, that would be a really great thing. I'm working with a tax attorney on some things, and he is helping the IRS with some things, it seems, or at least he's got their ear and is explaining certain parts of NFTs and DAOs and whatnot. And so I don't know if there's a task force that's actually going to help us anytime soon, but hopefully, because there's no reason for uh, NFTs to do $10 billion worth of revenue this year and not have any tax guidance from the IRS. It's kind of going to screw the IRS and us.
Yeah, 100%. And so like if a lawsuit does happen, which you think is probably likely to happen, what would be ideal, I guess, for the NFT community? Would it be to go after a big player like Top Shot, for instance? And like, what would be the result in that case? Or would it be, better to go after like a small player and kind of like keep it low key and just, have something to establish these guidelines?
Hmm.
What do you think?
That's a good question. I think the idea that like let's stay with Top Shots because they already, because Flow Dapper Labs was already served with that lawsuit. I mean, I read the complaint. The complaint wasn't any good, and the argument wasn't any good. But it would actually, even though it would cost Dapper Labs probably a couple $1 million to deal with it, and I guess I don't know where that lawsuit is right now. It would likely be useful for the rest of us if they did go through that court process, simply to help the United States courts help them write the opinion that says, well, this Top Shot thing is clearly not an NF, is clearly not a security, right? This is a collectible digital basketball card. This is not a security because that would be kind of beautiful for all of us, I think, because I keep getting asked probably every day. I mean, I had a call just before we got on this podcast that's asking me about is this a security? And I was like, no, this is not a security. The thing they were describing, I was like, no, the thing you're describing is not a security. And they were like, well, I think we might want you to write like a formal legal opinion or like help us find multiple formal legal opinions. And I'm like, wow, we're still shaking in our boots a little bit just because the SEC hasn't like specifically stated out loud, right, that these are not securities. So uh, if it takes a lawsuit, that's fine. It doesn't really matter if it's a big guy or a little guy.
Got it. Okay. Shifting gears a little bit, the other big topic I want to talk to you about is DAOs. I'm
Mm.
very bullish on DAOs. I'm in a few DAOs myself, but there's still a lot of uncertainty around the legal ramifications of DAOs, even for just, ordinary members and contributors. So, like in DAOs, you normally see you'll have, the founders or like sort of like the council that is, um, makes the votes, in the case of like a really large DAO with hundreds or thousands of members, or smaller DAOs where everybody is on Gnosis Safe voting on things. So, I guess, where should we start? Let's start with, the DAO as an entity. Like, is it cool for people to just form DAOs without making it an LLC or a legal entity? Or is that like a bad idea across the board?
I think a DAO needs a thesis, right? A DAO needs a thesis and a general idea of how many members they want. And that's just where I think you start. I know that's kind of like almost sounds like it's sidestepping your question, but like it really matters. Like, is this DAO forming to purchase one NFT, or is this DAO forming to build a community, right? Or is this DAO forming to build a company? Like, what is this DAO doing now, and what's the intent for later? I think those are like kind of the key questions to ask early on in approaching DAOs. And the entity formation of a DAO, right? At this point, we're talking solely in the United States jurisdiction, because I can't fully answer all of the ways in which you could or could not build a DAO in Mexico or Panama or Switzerland. But as far as the United States is concerned, a DAO without an entity, right? Just a group of people who fund a multi-sig and then call it a DAO. That's going to be treated like a general partnership, right? The definition of a general partnership is a group of people doing a thing together for profit. Um, that's what a DAO is. Sometimes DAOs are nonprofits in nature, and maybe there's another way to go about structuring those, and that's where you get to the entity question again. But without the entity question, like it's just like, okay, if we're forming a DAO, we're going to do something together for profit. Are we looking to have 10,000 members, like with a voting stake, or are we looking to have, you know, 20 members with a voting stake? And I've been kind of fortunate enough to be working with Aaron Wright and the Open Law crew and Flamingo DAO on several DAOs recently, and I kind of was like the key person on building a specific one not long ago called Ready Player DAO. We could chat about that if there's time and if you'd like. But basically, the getting money together in a group and saying, "Hey, we want to do this thing," that's totally cool. It's just once you've done that, you've got to really decide how to, okay, how do we structure it? Are we letting people in or letting people out? Are we, going to go ahead and be a 99 member or less DAO, which 99 people is above that is where you break some kind of securities thresholds and you create like this investment club thing that's more like a fund at that point, like a massive, almost like a mutual fund. And that's just incredibly different regulations. So you'll notice Flamingo DAO and several others are very clearly going to have a 99 member cap, and they're not at 99 members yet, but they won't go above 99. So our Ready Player DAO, we're doing the same thing structurally, and the entity itself, the LLC, is it's there for basically, when I mentioned general partnership, the only problem with a general partnership is it means that if you ever get sued, like if the DAO were to get sued, then everyone is potentially equally liable, like personally liable. Not like, oh, well, our DAO got sued, so now our DAO owes money. It's like, no, 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 our DAO got sued. All of us might owe money because there's no entity to protect us. So I say think of a DAO with an LLC as basically playing a video game and having a +1 life. And if somehow you like actually F up or you get sued into the ground or you have a problem, the worst thing they can do is take all the money in the DAO, aka the LLC, all the money in the wallet, and basically put the wallet and the company out of business. But they can't then come sue any of you personally for any extra money. And that's a really really key protection, obviously.
Yeah, and sort of to back up a little bit, I've actually talked to quite a few people who, don't come from legal backgrounds and they don't even know, like what sorts of things could come up in a DAO where, either somebody would sue someone or when the DAO would get sued. Do you have any examples like from real life, like obviously without saying names or anything about like things that
Totally,
have gone wrong in DAOs?
totally. So I think we're really actually so early that we haven't seen a good example of this yet. I want to say, and maybe you'll remember better than I do. Was it like 2 months ago? Didn't Yearn and Curve Finance have an issue? Somebody's source code was copied. Do you remember what I'm talking about?
I vaguely remember that,
There
but
was
I
some
don't
like
know the details.
massive DeFi DAO who basically had their source code like copied and then utilized, and they had this big thing, and it was on Twitter. They were trying to figure out like, hey, can we as a DAO protect our IP, which is this copyrighted code? Can we stop other people from copying and utilizing our IP however they want? Um, I saw people pushing to sue, other people pushing not to sue, and screaming, "This is crypto, like this is open source, whatever." I don't know what the final outcome there was, or if there was a final outcome, but essentially, you know, we haven't seen any DAOs that I know of, formalized or informalized DAOs, get sued yet. Um, so that's why I say a DAO without an entity is likely going to be treated right, likely going to be treated as a general partnership because I don't think we've seen one yet that has gone to court in any way. But to play the theory game, imagine 10 of you are on a multi-sig or 1,000 of you are on a multi-sig and you screw something up and your DAO deserves to get sued, right? You don't pay a contract or you don't do something. Well, what they would try to do, I guess, is go after one member that they can find here in the US, sue them personally, and then in court try to join. Like joinder is the word, right? So try to bring in, and I know you're a lawyer, but this is for everyone else, right? Uh, a former lawyer. Sorry, you're a former lawyer. I don't want to put you in that camp of lawyers.
Yeah, don't
And
come at me. Don't tweet me your legal questions. I don't want any of
I
that.
don't, I don't want to lawyer you up. And yeah, so you could sue one person in the DAO, attempt to joinder in the other like 99 unknown members, or the other 1,000 unknown members. And then that one person that you sued and brought to court, they would definitely beg their buddies to join them in court, right? They're like, guys, please come to court with me. Help me defend this. But they may or may not be able to reach those people, and they might can just sue that one individual person for everything and win. Like, hey, you're a known member of DAO XYZ. You didn't pay this $1 million contract. You have to pay this $1 million contract. And they could go to the rest of the DAO and beg the DAO to help them cover the $1 million, but there's probably nothing that can force that DAO to do it because it's just an informal group of people. And it's either going to be good vibes or bad vibes. And that person's going to be kind of screwed or not screwed, right? So this is why the LLC just makes way too much sense because that risk is pretty intense for people joining that they might could personally get stuck with $1 million tab or a 10 or $100 million tab. Um,
And
so
just
yeah,
and just
I hope that makes
and just
sense.
to clarify, the people that the liability we're talking about here, does that apply to anybody who is like a so-called member of a DAO or a contributor, or does that only apply to people who are, voting on Gnosis Safe or who
Mm,
have put money into the DAO, or like what is the cutoff for that? Because, like so many people are like fringe members in like so many DAOs
right,
and they're only
right.
active contributors in like maybe one or two. So do they have liability risk in all those DAOs that they're fringe members in, or only the ones that they, have money in or are voting on Gnosis, or like where's the line?
Yeah, I think it's probably important for me to clarify or add that DAOs are a very loosely used term right now. Like the word DAO is used probably way more often than it should be, in the sense that if you've just got like this utility token floating out there and anybody can buy X number of tokens and then they are a member of the DAO, or you own a certain NFT and so you get airdropped tokens that make you a member of that DAO. A lot of those DAOs that I'm referencing there aren't legally formed entities, and the members that are buying these tokens have never signed any paperwork, right? They're not members of an LLC or of any kind of protected anything. So there's potentially going to be some really awkward lawsuits that put some people like that really screw some people that didn't see it coming because they're going to be like, "Oh, well, I didn't know I didn't know that I was wrong to do X, right? Or I didn't know that I couldn't by buying into this one DAO, and then like some other people who kind of run the DAO. I just have tokens in my wallet. They did some terrible stuff that I didn't know about and I didn't agree with. I shouldn't be able to get sued for that, right? I shouldn't be able to get in trouble for that. And if the court decides that it doesn't matter what you think, then the court's just going to say screw you anyways, right? And so the law has this like just because you were ignorant to a law doesn't mean that you aren't held to the standard of the law. Um, I think there's going to be some really interesting DAO litigation with people who join a thing because their friend said buy these tokens, join me on this club, join me in this group, like let's go to this together, and they're not really like sure like am I a member of this thing? Am I liable for this thing? Also, some of these DAO membership tokens are definitely just being bought and sold, like treated like securities, right? Like going up and down in value. People are buying and selling them to make money. Um, which if somebody says I only buy these tokens so it lets me in the club, and somebody else says I only buy these tokens so they'll pump my bags, that's not a great look either. Um, so uh, I couldn't have had this conversation with you 6 months ago, and I don't think DAOs were ready for this conversation 6 months ago, right? But I think where we're at now is like calm before the storm, where I'm a part of a DAO, I'm a part of a couple DAOs. I'm talking to a bunch of DAOs or potential DAOs, and at some point, there's going to be billions and billions of dollars generated by these small groups utilizing a structure called a DAO, or loosely calling themselves a DAO and not utilizing any structure. And the government's only going to let that happen without clarity for so long, right? What do you think? Like, I'd love to know your opinion on this because you're, as someone in multiple DAOs and with kind of a legal background, like, do you like agree with what I'm saying? Are you seeing it a little different? Yeah, like what do you think?
I think you're probably right. Like without actually, having studied like the legal implications, which I guess like we just don't know right now. But yeah, I mean, I'm definitely like scared about what's gonna happen. Like I'm doing it anyway, but I'm also like,
Yeah,
yeah, like
right, right.
I could be like totally effed in the future. Yeah, I think
I think it's a good reminder to just like pull some profits off the table along the way, right? Like I don't mean like go find a financial advisor and get a 401k and like dump a bunch of money into some random safety net. Like that's not what I'm saying, but like every now and then when a bull run occurs, whether it's X token or ETH or any of the things, it just isn't a bad idea to say, you know what? Actually, I'm going to go take a little bit off the table right now because, I might need to pay taxes and these taxes might really screw me, right? Or I might get in a situation where this DAO I'm in or one of these 10 DAOs I'm in actually gets sued, right? Or gets, plowed into the ground through a lawsuit, or I'm now personally liable for X amount of stuff. Um, I don't think people should live scared, but I also don't think people should live stupid, right? So if you're worth 200 grand on paper or 200 million on paper, it just doesn't suck to pull 10, 20% every now and then into the safety net account for the just in case, right?
yeah, it just hurts knowing like sitting in like a normal savings account, you're just basically losing money when you could be investing in crypto. But
Yeah,
um, so
I know.
so like
It does hurt. I totally agree.
for people, yeah, and I think like the rule of thumb really is to like go out and do the things, but be smart about it, be careful about it. Like, don't be so scared that you're not going to participate in this ecosystem at all. So, like, from a
Totally.
more practical perspective, if this is your advice to people out there, what does that look like in real life? Like, if somebody's deciding whether or not to join a DAO, what questions should they be asking themselves and making sure they know before, in order to help them decide, like, should I join this DAO or not?
Yeah, I think you have to start with like how participatory do I want to be in the DAO? How participatory can I be in the DAO? And then, what's the thesis or the ethos of the DAO? And if those two check boxes are met and you're like, okay, I can and do want to be participatory in this DAO. I can and do agree with the thesis, ethos, whatever. I want to do this thing with these people. I can meet the minimum if there's a minimum or however you want to do it. Um, from there, it's really just like, okay, are we going to let anonymous people into our DAO, right? Like, anons and pseudonyms are great, and I'm friends with many of them. Uh, but you can't mingle your money with an unknown person in the US, right? Like, that's just not really allowed. So it's kind of like this big awkward moment where it's like, oh, well, I really like so and so, but I actually don't know their details. The way that Open Law, working with Flamingo DAO and now spinning up several other DAOs, the way they do it is Open Law's team basically is a group of lawyers and operators, and they will KYC people. They didn't have, I don't think they fully KYC, but they do the legal requirements and end up with personal information and tax paperwork on every individual that joins a DAO that's associated with open law. And that's really the only way to utilize the LLC protection as of now, it seems, is to have the 99 or less members and be KYC. Um, Anything above that, you'll notice there's news that's either come out or is coming out that Friends of Benefits is going to utilize a C corp structure, right? C corp with a DAO. They're the first to pioneer it. They're utilizing some investor money, some really interested lawyers, a really smart crew, and yeah, we'll see what happens. But a C corp can obviously have as many members as they want. They're just totally pioneering what it means to buy a token, to be an owner, a member, to be involved in this C corp structure, and try to not call it a share or a stock, right? Um,
Yeah.
and it's fair to say that like these guys are some of the most innovative people in the space, and what they've built is really quite interesting, but also is on the bleeding edge of innovation, which makes them one of the most likely people to potentially get sued over it, right? Or to go to court, not sued because, hey, you guys are criminals, we're going to fine you and put you in jail, but sued as in like, hey, that structure isn't allowed here, or we don't understand that structure, come explain it, right? So hopefully Friends of Benefits with some counsel, with some investors, are able to really put together, a solid argument. And if and when they're good to go, they will definitely have set a precedent that a lot of people are about to follow. Not just for a gated Discord, but just for entities and corporate building in general. I mean, you know how many people I know that work at Reddit, Apple, Google, Microsoft, etc., that would rather leave, take $500,000, put it on the table, and be a co-owner in the thing they're building? All of them, right? Like, instead, they usually get hired as a 2% member of a young startup. It's like, no, no, no. We're all 2% owners. We're all putting 50K on the table. Let's build a thing. That's really sexy.
Yeah, yeah, and I think that's probably the biggest draw of like why so many people join DAOs. All right,
Totally.
cool. I've got two more things to talk to you about. These are non-legal things, fun things. Do you have time, by the way?
Do it. Yeah, yeah, yeah.
Okay, cool. So first thing is you brought it up earlier, Ready Player DAO, Ready Player One,
Yeah, yeah.
Ready Player DAO. That's one of your projects that you were involved in. Tell people what that is and like how people can participate if they're interested.
Yeah, so it's called Twitter's Ready Player DAO, all one word. Spin off Ready Player One, obviously. Um, Basically, play to earn gaming, I think, is going to be probably $1 trillion industry, maybe multi-hundred-billion-dollar industry on the low end when you account for in-game skins, in-game NFTs, in-game yield off of SLP, like with Axie or other things. It's just a beautiful cross between DeFi and gaming, and we all love DeFi and gaming. So, Ready Player DAO, I kind of got annoyed that I didn't know enough about Axie in June this year. Like I had seen O'Shiny and Fuckrender and some of my other friends with Axies in their profile for like months, like back since probably January or earlier. And so finally, I wanted to have a meeting with someone who ran some Axie teams. He had managed some scholars in the Philippines and Venezuela. And I invited five of my real life friends, five of my internet friends, and we had a group call. And my real life friends were like, yeah, like we might could put 5K into this. And then my internet friends were like, we're in for 25 ETH each. And so we're like, okay, who else should we bring on? And we invited a few other people. G Money's a friend of mine. He showed up. He's like, oh, I'm in. I'll put a larger number on the table. And um, then yeah, so Flamingo Dow and the Lao and several of these other members, really, we have a really fun crew spread across people that are worth billions of dollars, and then like my assistant, and he's my homie and my operations manager, but like he wouldn't normally be joining a DAO with several billionaires, right? I wouldn't either. But we were point people. We were instrumental in doing it. So shout out 0x Kilroy on Twitter. That's my guy. So we pulled it together, and basically our original thesis was Axie is yielding really serious returns, like 100% ROI on your money in 100 days or less. And that's just absurd, right? You can't just double your money in 100 days. Um, but we became bullish on Axie, and then taking some gambles in other games that are emerging, and then getting ready to write seed checks in some of these other emerging companies. So that's kind of the three things the DAO does: is Axie right now, while we're waiting on other games to have fully fleshed out play to earn mechanics, taking small bets on new games, buying lands, buying in-game assets, getting access, and then getting ready to write seed checks basically in some of these up and coming companies and games. Um, we originally ended up pulling together like 1,500 ETH across like 36 people, 38 people. Everybody signed legal paperwork. Everybody's in the crew. We have an LLC under the DAO, and right now our intention is probably we will be raising soon. We've got a couple of really, really dope VCs and friends at high places, I guess, that are interested. Um, if anyone is like hella interested and listens to this, and they're like, "Oh my God, let me in!" Like, you can send me a DM or something, and we'll let you know when we're like raising and stuff. We're trying to figure that out right now. And then yeah, like hopefully our goal, I think at this point, our goal is there's a path to token, right? So taking a DAO from being a small private DAO to token has not yet happened realistically. There's usually a small DAO with an ERC20 token internally, and then they publicly sell some later. We literally don't have an ERC20. We have membership units in an LLC, and we have a DApp where we can go vote, right, based on how much of a vote we have. And so we will likely add a token someday. And there's probably not enough there for me to explain that I actually can put out there, but that's the idea.
Nice, nice. Well, definitely,
You can
I'll
join.
keep
You
my
can
eye
join
out.
if you want.
Amazing. I'll slide into your DMs after this.
Do it.
And then the other thing I wanted to talk to you about real quick is you're working on your own NFT project, and it's a tax NFT project. Can you talk about that yet? I know you've like teased it on Twitter and stuff.
Yeah. When is this podcast going live?
Probably like Monday.
Okay. Yeah,
Is
that's
that
fine.
too? Yeah.
No, it's fine.
Okay.
The high level is um, I'm gonna do 50,000 NFTs, which is a lot. But what we're gonna have is just a couple of bullet points. I'm working with two tax attorneys, an international tax attorney, a domestic tax attorney, and two accountants that have all been in crypto for 5+ years and all been dealing with IRS audits. We're putting together it's probably going to end up being almost a 10-pager PDF that's going to be the definitive tax guide on NFTs, DeFi, and crypto, in general. Um, and then the part that I'm hoping to get right is I've been auditing these tax softwares because I'm hoping to partner with the right software or software companies, multiple maybe, to give away like a 1 year free subscription to one of these software companies. So the NFT, it'll have its own visual representation, then the unlockable PDF, then hopefully a 1 year subscription kind of baked into one of these software companies. I can't give any more than that.
Okay. Okay. Don't have a launch date yet.
October 26th.
Okay. October 26th.
Yep.
And then is there a website or where do people go to mint?
Not yet. Nothing. You
Got it.
can't do
Okay.
anything yet. You can't do anything yet.
All right. You just gotta follow Jacob on Twitter so that
Oh
you
my
can stay
goodness.
apprised on that.
Something like that.
I'm
Yeah.
pumped. I'm pumped for that. I mean, there's just like no resources like that out there yet, so I think this is gonna be huge.
Right. I hope
Yeah.
so.
Yeah, it will. It will, I'm sure. All right, awesome. Thank you so much, Jacob, for taking the time. I know we've gone over time, so I apologize for that. Before you go, last thing, just tell people where they can find you on Twitter, what your
Yeah,
handle is,
totally.
and then if there's like
Totally.
anything else you want to plug as well, go for it.
Yeah. So my Twitter handle is at the NFT attorney. Uh, there are other people who do NFTs and law. It's fine. It's not just me, but it's the Twitter handle. And then my website is www.jtmtechlaw.com. And you'll know you're in the right spot if you see a CryptoPunk on a lawyer's website. That's what that looks like.
Absolutely. Awesome. Thank you so much, Jacob, again. Thank you, everybody, for tuning in, and we will be back again soon with another episode of the Unstoppable podcast.
Thanks.